the stock market morning prep video for Monday, July 14th. On Friday, markets closed green with nominal gains. Dow Jones up 28 points, Nasdaq up 19, S&P up 2, almost 3 points, and the Russell, which is significant, actually closed down $1.93. Not much of a red close, but it's something that you have to take note because Russell is an important, as we all know, it's a high beta index, and it's a good measure of risk on, risk off. Investors feel comfortable, they want to take on more risk. Well, that's not the case this time. When we sold off last week, which was a very difficult week if you were a swing trader, and that's why I get a lot of emails. Mark, what are you doing in this crazy market? Well, I'm just day trading. If I don't find any trades, I'm just stepping off to the side. And actually, a lot of trade setups, if you will, really haven't been the greatest. So I just kind of take a step back. And when you get a day like Tuesday down 30 handles first thing in the morning, yeah, that's great. The market recovered, and now I think we're up a little bit in the early morning session for Monday. It's you have to wonder. And again, remember, guys, I'm neither a bull or a bear. I follow what the trends are and what the market indicators tell me to do. And price is king. Price is what pays us. So I definitely continue to look to buy stocks that are in bases, that are coming out of bases, that already made their move lower. I am not chasing stocks up 10, 20, 30, 40, even 80% since May. The markets have literally have gone parabolic since May. I think we've had maybe 4 down days, 5 down days since then. And it's just unsustainable. It's only a matter of when. And we had a little flavor of that on Tuesday, and then again on Thursday, where the market sold off, and the markets kind of bounced because of low volume on Friday. And now we're getting some follow-through for today. Remember, the markets are made to fool the masses, and that's, to me, is not a good environment for holding swing trades. If you're doing option trades, spreads, and stuff like that, it's perfectly fine. Or if you are holding swing trades, you want to hold them with very little exposure, But it's just the markets are definitely giving us some clues. And if last week was what is to come, we are entering now a seasonal time of weakness. That the markets have actually been weak in this time period since 1980. I think we've lost. I believe it's recorded somewhere around 0.8%, something like that. I'm not sure. I'm sorry, 0.5%, 0.50%. Okay, it's not a good sign. Usually, you have markets weak to choppiness going into the fall, but obviously that could change as well. The market just continue to grind higher. I do see higher prices on the weekly charts on the indexes. By year end, unless that's obviously something changes. You do have this political conflict going on. Now you have 2 different sections. You have Iraq, you have Russia and Ukraine. They're starting to heat up again, and the market just continues to ignore it. And but at one point in time, things are going to change, and we don't know when, right? We don't know when, and that's what the market has dealt us, and we have to really navigate through that. So again, I always say use a word of caution, but I'm not telling you to short the market, okay? I want to find little nuggets, little trades in between this mess that we're dealt with here, with indicators telling us one thing, breadth of the market very weak, and markets just continue to run higher, and that's where you have to be careful, because when you look at things and you look at stocks like these high beta stocks, Amazon rallied, Priceline didn't. Tesla sold off. I mean, it's a whole mixed bag. We don't have all of these higher flyer stocks that are running at the same time, and usually you have that, and we don't have that. Now we have a big mixed bag, and I'm just saying, just please be careful. That's going to change, right? I mean, things do change. It's just a matter. We have a market cycle right now that's very difficult, and we need to just stay alive until the market cycle ends, and then we get into some easy trades and easy money to be made in the marketplace. All right, so let's just run into a couple of these indicators. I'd like to start on Monday. Now, we had the McClellan oscillator close below the 20 and then close below the Bollinger Band and close in the Bollinger Band. So, to me, that's a buy signal for the market. So, I would expect some follow-through coming into this week, maybe even just today or tomorrow, but at least for today, look for a little follow-through going into Monday, okay? And then we'll take a look at that again. these are the indicators I like to look at and are a big concern of mine. Are the New York Stock Exchange 52-week high. We do get a little bit of a dip after the market makes new high, but we didn't recoup at all. So that's another concern of mine. And then when you look at the breadth of the markets and you look at the advanced declining issues, we're up, and then of course we kind of chopped around a little bit, but this hasn't recovered at all. This is continually making new lows. So the breadth of the market isn't good. And then when you have advanced decliners here, this isn't good at all. So none of this indicators are telling me, hey, we're moving low, we're moving higher. The only thing that I do like is the ATR, the average true range. When you have volatility, the average range starts to increase. If you look at this, we've been below this area here back in November, December, and then sure enough, we had the little sell-off going into January and beginning of February. And what happened? ATR rallied hard. And that's what I'm looking for. If we start to rally and break out of this 13 area, that's when that's going to tell me, along with the other indicators, that we might have a local top in place, okay? So just keep an eye on it. One thing, a few people asking about builders. What do you think? There are seasonal strength in the builders, but it's not showing it. And why? Because lumber prices. And I had mentioned to you, watch lumber. It's very important because if lumber prices break down, it's cheaper for builders, but that means demand is starting to slow. When we had lumber up here, we had the markets rally hard. Look what happened in this area here. Lumber prices broke below. We did get a little bit of follow through, and sure enough, it caught up and sold off hard. Now, when we had this rally push up from the lows, we did get a little bit of a push higher. That's because the markets are moving higher and everybody's just looking to buy stocks. We started rallying, but look what happened. It caught up. So we want to see lumber prices break back above the prices of the home construction, and then that, to me, would tell me that we're back in the trend again. But until then, I would stay really, really short term on the builders. If you're looking for a long trade, I would be looking to just take it as day trades. Right now, lumber prices are breaking down here. So, excuse me, that's something that I'm not too crazy about. I do think that the builders are a great trade, but why would you want to hold into something like this? Let's just get a good spot, look for a good point in the charts, and then look to buy them. All right, so let's look at the indexes. Here's another concern of mine, and I've been saying this for quite some time, are bonds. We had a big move up of bonds. Now, we've had market highs in equity markets. Why haven't the bonds sold off? Well, I've been saying that bonds are in a short squeeze, and I do think bonds head lower in the longer term time frame, the weekly charts, but in the daily chart, I think we're going to see this target. That's going to be my target, 1618. We had a head and shoulders, inversely, left head and right, and that target from here to here measures perfectly with the 1618. So I do think that higher prices are in the cards for bonds. It's not going to get straight up there, but I do think that's looking to buy pullbacks and building a small position in that is absolutely fine. And I do think that we test this 138 breakout, and then we move to the 140.26. That's going to be my area for bonds. Now, so if money's still going into bonds, money going into equities, there's got to be who's going to be right. And I think in the short term, I think bonds will be right. I mean, just unsustainable. Now, we look at the Japanese yen spot future, which I've been showing you this chart since January. As you can see, we've been in this ascending triangle. We've had a cluster, a Fibonacci cluster, which we broke out of, and now we're kind of back testing, which is now support. And this is the area here. That last ditch effort, it needs to break out. It's going to be that 200-day moving average. If we break out of that, I'm going to put some fib targets up above for some targets above here. And if that happens, then I would say you would most definitely will have market weakness in U.S. equities, and I would say worldwide equities. So keep an eye on that. This is inversely correlated to the dollar yen, which is correlated to U.S. equities. So just keep that in mind. But again, stay long. If you want, absolutely, I would be buying protection, or I would be day trading stocks that are long. Or if you are looking to get short some relative weakness. But it's very, very strange and weird the way the markets are actually reacting, especially when you have these conflicts going on. It's incredible. All right, ES. Difficult week last week. We ended up following up before Friday, ended up small. We had follow through for that Monday. Tuesday we had the big down day. We bounced and then we sold off again on Thursday. Followed through on Friday, and now we're up 575 this morning. So if all stands okay, you're probably going to look for an upside target now. It's going to be that 1186, 1187 area, which will be the upper end of this channel. That's going to be the target if the market wants to get up that way. Okay, so just keep that in mind. Transport's holding up relatively well, and at one point when oil was up, I still didn't realize why the transports were up, other than the fact that everybody's buying more, buying equities. Why not buy transports, right? But now the oil took a little bit of a hit, and it's down again today. So understandably why that transports are up. But again, guys, a move like this, you get a couple of down days and then moving higher again. Eventually, it's all going to give way at one point. Who knows when? That's the timing factor of we don't know. Here, I think, is a little bit of the canary in the coal mine. IWM did not recover and is below its 20, its 34, its 50, and the 200s here. Now, you remember, I mentioned this months ago, that the Russell led the market lower in the crash of 2000. Not saying that we are in a crash mode, not in any stretch of means. I just want to let you know. Watch it because it's very important. And we'll see if this market, if the Russell can push the markets lower, or does it play catch-up like it did here, right? Remember, we were moving lower for months, and everybody was saying, oh, the Russell. As long as I was doing the same, saying, hey, you have to use caution. As a technician, you have to realize that the Russell is a big factor. And sure enough, it played catch-up with their other four indexes and then rallied substantially. So it's a tough call. You just got to be careful, though. Again, I'm only posting the red flags out there, not saying to go short. Be long, stay long, but just use caution and reduce your risk out there. Okay? And lastly is the Qs. We have the Qs at the 1618. And again, we're extended. I mean, we are from this high to this low. We now took out the 127. We're at the 1618 again, challenging the ones. I mean, just overextended. If we can get a few days, a week, maybe 2 weeks of just some softness and just unwind some of this overbought readings, I think the markets could have a beautiful chance of going higher. But when the market just grinding higher with no real pullback, I mean, it's just a concern of mine. All right, guys, be careful out there. Use your stops. I'm looking for some good quality trade setups. I haven't found anything that really excites me to post it on the morning video, but I will be looking and continue to look for some good ideas, and when I do see them, I will post them, other than, of course, quick little day trades. Have a great day. We'll talk to you tomorrow. Take care.